Hey everyone, and welcome back to FinTech. In today's video, we're going to be reviewing my now just over $135,000 stock portfolio. In this video, I'm going to be first looking at the total stock portfolio performance, and then I'm going to be diving into the individual stocks and seeing how those have performed, and then offering some of my own thoughts on those individual companies. Finally, I'll let you know about any additional sales or purchases that I've made in this account in the last month. And a quick disclaimer, I am not recommending that you allocate your own portfolio in this way. I'm not an investment advisor or a stock advisor or financial advisor. I do have a totally separate portfolio where I put most of my money into more conservative index funds and ETFs. With that said, let's look at my portfolio. So if we open up Charles Schwab here, so you can see that as of this morning when I'm recording it, which is actually December 4th, I'm a little bit late on this video, my personal value is now at $137,000, which is up just $300 in the last day and up $27,000 in the last 3 months. Now this isn't the most useful view here, so let's go to the year-to-date view. So just looking at this chart right away, you can see that my value in this account has grown like crazy in the past year. In fact, it's grown over $100,000 in the past year. Now, some of that is due to me just adding money to the portfolio, and so it's naturally grown from that. But then a big chunk of it is just through capital gains from the stocks appreciating. This year specifically has been really good for my stock account because everybody's been forced to work from home. You'll see a little bit later, but my stocks are mostly invested in tech stocks, especially stocks that focus on the move to the cloud, as well as software as a service companies. These companies basically benefited the equivalent of 5 years worth of growth all in just this 1 year because companies were forced to move faster into the cloud to cope with the whole work from home situation. Because of this, I don't really expect me to ever see this kind of growth again. I mean, up almost 300% in 1 year isn't realistic for anybody, but that doesn't mean that I'm not happy to see it. Okay, so now let's change this to just the 1 month view since October. So you can see here that most of this month my portfolio is down. It hit a peak on November 8th of a little bit higher than it is right now, and then it dropped basically for the rest of the entire month, before slowly kind of building its way back up recently. It dropped a little bit on December 1st, and that was because Zoom reported earnings and the stock dropped right after that. If we go to the 3-month view, you can see that the actual peak for my portfolio was back in mid-October. This was kind of when a lot of the companies that I was investing in were about to report their earnings for Q3, so expectations were really high. And then because I think work from home slowed down a little bit, they were all hit by a lot of concerns that these cloud stocks and tech stocks were gonna be affected by people going back to the office, and so those dropped a lot. But again, these are just normal fluctuations that you see in an account, especially one that's invested in individual stocks. So going up and down, 10, 15, even 20% is pretty expected. So now this view that we're looking at right here is actually a combination of the money I have invested in my Charles Schwab account as well as my Vanguard account. So I keep this Charles Schwab account as my brokerage account, which means I can just invest money in here. If I sell it, I'm taxed just like anybody else would be. If I sell within 1 year, I get taxed as income. And if I sell over 1 year, it's a long-term capital gains taxed at 15%. Now, in addition to this account, I also have a Roth IRA Vanguard account. Now, a Roth IRA account allows me to make trades in and out of different stock positions without accruing any kind of tax penalty whatsoever. So basically every year I try to max out the amount that I'm allowed to contribute to that account, which is $6,000 a year, so that I can take advantage of those tax advantages and I can move a little bit more quickly in that account because I don't have to worry about selling after 1 year in order to avoid short-term capital gains. Okay, so this total view here isn't really that surprising. This is kind of what I expected just from kind of watching my stocks over the last month. I don't usually check this very often, but if we go down to my actual individual stock positions, you can see that I have 6 stock positions right now. Let's just go through these. So the first one we can look at is Alteryx, which is my smallest position. It only has $1,000 invested. Now Alteryx, I actually made a video on several months ago explaining why I was selling out of the position because I thought that they weren't going to grow much until the headwinds from people working from home and companies cutting back on their spending disappeared. Now because of the way Alteryx does their accounting, once they started to experience a slowdown in their growth from companies not spending as much on their platform, it hit their revenue really hard and they had a huge drop in the stock price. Once they see that revenue start to accelerate again, they're going to see an equivalent jump in their revenue. Right now I'm just keeping a small position in Alteryx just to keep it on my radar. You can see that my cost basis is essentially the same as the value right now, and I basically have no gain or loss in this stock. The next one to look at is Cloudflare. Cloudflare is basically a CDN provider, which also provides services like DDoS protection for websites, as well as moving into new areas like edge computing, which is where I think they're going to see the most growth. growth. I made a whole video explaining why I sold out of my previous position in Fastly and bought into Cloudflare instead, so you can watch that if you're interested. But because I sold out of Fastly, my market position in Cloudflare grew a ton. It's now over $22,000, but that's not just because I invested a ton of money in Cloudflare. In fact, I only invested just over $14,000. The rest of that is entirely gain in the stock. You're gonna see in a little bit that a lot of my stocks have gained over 100%, and Cloudflare has gained over 100% for some of my earlier investments. But the reason that this gain is not 100% of my cost basis is because I dumped all that Fastly money in relatively recently. The next stock to look at is Crowdstrike. Crowdstrike is my second largest holding at almost $33,000, and this one has performed unbelievably well since I've owned it. My cost basis in this is under $12,000, and it's made me almost $21,000 over the course of the time I've owned it. Now, Crowdstrike provides endpoint security protection, so when everybody had to start working from home, a bunch of companies had to end up paying for a ton more endpoints with Crowdstrike, which drove their revenue up dramatically. Now, Crowdstrike, like a lot of these companies, did take a hit recently with the sector rotation kind of out of tech stocks, but even then, it's still up almost 200%. Next up, we have Datadog. Now, Datadog is a company that I haven't made a video specifically on, but I do mention it in the top 3 stocks to buy for 2021 video. Datadog is my third largest position at over $30,000 invested. And that started from a position of just $15,000. So most of that amount is actually growth in the stock. So this is another over 100% gainer. Datadog essentially provides data services for companies. They try to combine their security, applications, and infrastructure for companies all under what they call a single pane of glass, so that companies can gain new insights about those 3 areas. Next up, we have Okta, which is an identity access management company, kind of like single sign-on and those sorts of things, but with a strong focus on cloud technologies, which is partly why it's performed so well this year. Now, Okta is my second smallest position at just over $12,000, and it's also my worst performing position, up just around 80% for the year. I saw a comment on one of my videos that being up 80% for a year is a really good problem to have, and I agree. But it kind of just goes to show how crazy this year has been, that this stock, which by all accounts has performed incredibly well, is my worst performing stock besides Alteryx. And now the last company on this list is one that anybody who's watched my previous videos has heard about, and that is Zoom. Zoom is my largest stock position at over $34,000 right now, and that was off a base of just over $12,000. So this has been my best performing stock position by far. Not by that far. So this has been my best performing stock position. Now, I just released a video analyzing Zoom's Q3 earnings report, and in that video I talk about some different risks and opportunities that Zoom is going to face in the future. Basically, I'm going to be watching this stock really closely, and if those opportunities start to materialize, I'm probably going to buy some more. And if those risks seem more likely, I might sell some of this just because it's such a large position. One other thing that I should call out here is if you look at the daily change column, you can see that for some of these companies, they're swinging by almost $200 every day. And I think that sometimes people can watch these numbers and get freaked out by it because gaining $200 or losing $200 is a lot of money. And it's really easy to get emotional about that. But you just have to remember that that's just normal swings in the stock price, and that's going to happen to anybody, especially when they're investing in these types of stocks, which are very, very volatile. So those are my total stock positions. And then you can also see at the bottom here, there's a summary of what my total gain is overall in these positions. Now, this isn't just for this year, this is over the entire time that I've owned these stocks, but you can see that my entire portfolio has more than doubled since I first bought these stocks. Now, you also see that my total stock position here is only $133,000. So that's because there's a good chunk of money in my Vanguard account in cash, and then I also have some money in my Charles Schwab account, which is just in cash, and that's just waiting until I find somewhere to put it. I don't usually keep money in cash by trying to time the market. I only keep it in cash if I'm waiting to find a position where I want to put the cash in. So for example, if one of those opportunities for Zoom that I talked about pans out, I'll have some cash on the sidelines that I can dump into there. These ratings are interesting. Charles Schwab does this thing where anytime I buy an individual stock, it gives me this rating on a scale of A through F. Like, I guess if I get an A, I'm doing well in their eyes, and if I get an F, I'm doing poorly. It's interesting because all of these has either F or D ratings, which you might say is because the stocks have run up so much. But no, the entire time that I've owned these stocks, my ratings have always been Fs or Ds. I might have had a C once. So if your brokerage provides these ratings, you probably want to take them with a grain of salt because clearly they're not the best at estimating future performance. Now, one last thing I should emphasize is that when you're investing in individual stocks like this, you're taking on more risk and you're going to be experiencing a lot more volatility. If we go to the 2-year outlook on this stock portfolio, Yeah, it looks like the line just kind of goes up steadily over time, but each of these drops here, some of these drops were by almost 20%. And at the time, that can feel like your entire stock portfolio is crashing and that everything you've done up to this point is totally wrong and you should sell out of the market. But if you do sell out of the market, you're limiting all the gains that you would have gotten after that point. If you're gonna need the money that you're investing in the stock market in less than 5 years, it really doesn't make sense to be investing in individual stocks or even in the stock market in general. Really, you should have that deployed to some kind of safer asset like a bond. I am comfortable holding these stocks because I know that over a 5-year period, they're gonna be higher than they are today. Even if they drop in the middle of that time period, eventually they're gonna go back up. If I need that money in less than 5 years though, this would be super risky because what if the stock dropped 20% and then I needed that money to say put down a down payment on a house? It wouldn't be available to me. So again, all the money that I have invested in this account is money that I'm prepared to lose at least in the short term. One other thing to point out is I never buy stocks based on the stock price just going up or down. That happens every single day and a lot of it is random, especially in the short term. When I buy and sell stocks, I make an investment thesis around the stocks that I'm going to invest in, and then if some information comes that changes that thesis, that'll cause me to sell the stock or it'll cause me to buy more of the stock. If the stock price drops enough and I don't see a good reason for it dropping, I might buy more of the stock because I'm essentially getting that stock on discount. So the one other thing which I said I would tell you is if I've made any trades in or out of these positions in the last month. So this has been a pretty inactive month for me, which is surprising considering how many earnings reports came out. The only change I made to this account is I added an additional $1,200 and then I invested most of that into Zoom. Other than that, I haven't made any sales this month and I haven't made any other purchases. So let me know if you own any of these stocks in your own portfolio, as well as maybe what you think about these stocks, or if you have any other recommendations that you think I should look into. With that said, I hope you enjoyed this video. If you did, make sure to leave a like. And if you don't want to miss out on any future videos, make sure to both subscribe and hit the notification bell. I'll see you next time.